What makes Bitcoin and Cardano different? What new crypto investors need to know about Bitcoin versus Cardano? Which one is better, Cardano or Bitcoin? How do they work? What's their bottom line? And how can they be traded? What are the pros and cons of investing in Bitcoin and Cardano? Today, you will get your answers, so stay tuned. Hello everyone, welcome back to Crypto World. In today's video, we will talk about what makes Bitcoin and Cardano different. But before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss out on any of our amazing videos. And let's begin! Bitcoin is a type of digital currency, which is a way of exchanging money that only exists online. In 2017, when the price of the currency went up by thousands of dollars over the course of the year, it became known to most people. In more recent years, the price went through the roof in 2020 and 2021 because traders saw it as a way to get rich quickly. In 2022, however, it fell by a huge amount. Bitcoin is a proof-of-work currency that is mostly used for spending and monetary transfers. While Cardano is a proof-of-stake unit for smart contracts and dApps, its two-layer structure allows it to operate for spending as well. Cardano is one of the most popular cryptocurrencies on a market with more than 10,000 crypto coins. Cardano is the name of the currency, and ADA is the name of each unit. Cardano was made by Charles Hoskinson, who also helped make Ethereum, another popular cryptocurrency. These two have different mining techniques, and Bitcoin has a bigger demand than Cardano. However, they both have restrictions on how many tokens may be produced in their lifetimes, implying that their prices may climb as they become more rare and more difficult to mine. While Bitcoin has long been the most well-known brand in the cryptocurrency world, there is a slew of other options open to those wishing to expand. Cardano is one such alternative. Cardano employs a distinct staking method from Bitcoin. In addition, it is less expensive to use and requires less effort to maintain. Bitcoin, on the other hand, is more widely accepted, making it simpler for users to trade the currency and put it to a variety of different uses. Here's a quick glance at how these two cryptocurrencies vary and what you can predict from them. Cardano or Bitcoin? Which one is better? So first, we will discuss Bitcoin and how does it work. Bitcoin came out in 2009 when the software that makes it work was made public. Its beginnings, on the other hand, are a bit mysterious, and a person, or maybe a group, called Satoshi Nakamoto claims to be the one who made the first cryptocurrency. Bitcoin is managed and tracked by blockchain technology, which runs on a decentralized computer network or distributed ledger. Think of the distributed ledger as a big public log of all transactions that happen with the currency. The network computers verify the transactions. This makes sure that the data is correct and that the bitcoins belong to the right people. A big part of the appeal of Bitcoin and other cryptocurrencies is their decentralized network. Users can send money to each other, and since there isn't a central bank in charge of the currency, it can almost run itself. This means that, at least in theory, governments and central banks won't be able to mess with the currency. Bitcoin can be used mostly without being seen. Even if a transaction is processed in public, a user's name is not immediately linked to it. But because of the ledger of Bitcoin transactions is open to the public, authorities are able to better track where Bitcoins go. It's a risk to invest in Bitcoin because of the limited supply of 21 million tokens that will be created over its lifetime. Over time, the rewards people earn for mining Bitcoin will decrease, which might enhance the currency's value. Now let's see, how does ADA work? Because Cardano is a proof-of-stake cryptocurrency, its tokens are created in a different way from those of other cryptocurrencies. The Ouroboros consensus protocol is used to distribute bonuses to miners. Slot leaders are selected by the platform in this configuration. During each slot, these leaders will check blocks for the chain. There are just a few slots leaders needed each time, and the mining process doesn't necessitate the employment of powerful or expensive materials. Cardano, too, has a two-layer development strategy. The first layer involves utilizing the ADA token as a cryptocurrency in the same way as Bitcoin. It is possible to trade assets in the second layer using smart contracts and decentralized apps. More options for managing different assets and payments are available through Cardano. By utilizing a smart contract system, you can rest assured that people will only carry out their responsibilities if the contract's provisions are properly fulfilled as well. But what sets Bitcoin apart from Cardano? Value. When trading Bitcoin and Cardano, you'll notice right away that the prices of each token differ considerably. As of September 2021, one Bitcoin was worth around $40,000, whereas one Cardano token is worth around $2. Because of the current market fall, both have lost their original worth, and there has been a significant fall in their price. But Bitcoin still remains in first position, while Cardano is ranking in the 8th position. Mining. To mine Cardano, the proof-of-stake method eliminates the need for high-end computers and mining rigs. To get rewards, Cardano blockchain miners must own a stake and validate transactions. Proof of work is used in Bitcoin, which requires users to mine the currency in order to use it. Those that give the most mining power have a better chance of winning the mining prizes, which are distributed at random. It is more expensive to mine Bitcoin because of the cryptocurrency's sophisticated and competitive mining process. To put it in context, despite its lower value, Cardano is typically more economical for miners. Timing and demand. Transactions take significantly longer to complete because of the extremely high demand for Bitcoin. The verification process for certain transactions can take up to an hour. Because Bitcoin's daily volume is usually around $50 billion, it is a blockchain with a high level of user activity. In comparison to Bitcoin, Cardano does not have the same level of widespread acceptance or widespread recognition. However, the daily volume is $6 billion, which indicates that there is a significant amount of activity. Verification of Cardano transactions can typically be completed in under a minute in the majority of circumstances. What are Bitcoin and Cardano's similarities? Functionality. Both of these currencies can be used to make transactions in the financial sector. Cardano has the advantage of being able to manage decentralized applications or dApps and smart contracts, but it can also be used for conventional financial transactions. Token limits. Both Bitcoin and Cardano have caps on how many of their tokens can be in circulation at any given time. Cardano will have up to 45 billion tokens, while Bitcoin will only have up to 21 million tokens in circulation at any given time. Because of the restrictions, there will always be some degree of scarcity for these currencies in the future, which could lead to an increase in the value of those currencies. What is the bottom line of Bitcoin and Cardano? If you think cryptocurrencies will be the next big thing, you could invest in them. However, you don't have to buy the tokens directly. For example, you can ride the wave by investing in companies that make money from blockchain technology. But if you want to trade Cardano or other cryptocurrencies, it's important to know that they can be volatile. And if you buy something that isn't backed up by anything, you could lose your whole investment. So don't put in money you can't afford to lose. While Bitcoin is an interesting experiment, it has a lot of problems that make it hard for it to be a medium of exchange or even just a way to store value. In fact, Warren Buffett, who is one of the best investors in the world, has said that the currency is probably rat poison squared and that he doesn't think of it as an investment. When you consider that governments could shut down the currency, it seems like a risky investment at best. And that's it for today's video. We sincerely hope you enjoyed it, and if you did, please give it a like and share it with your friends and family. Let us know if you have any questions or comments in the section below. And don't forget to subscribe to our YouTube channel where you'll see more of our incredible videos. And you can also watch our other videos that have been specially selected for you. Hey, we look forward to seeing you in the next video. Thanks for watching.